traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Thursday, the 5th day of August, and this is the Daily Report. Gold is currently trading relatively unchanged today, currently trading at 119548. It has had a high today of 12,150, and a low of 1189.20. We are forming again another doji in the market. We've had a succession of these dojis. Of course, the first doji right in here pointed out the bottom. We did have another doji as the market did begin to move higher, and this latest doji here. Now, dojis typically are that consolidation and can indicate a shift in power. They can also indicate what I'll call a breathing area in the market. We've seen it in many of these up waves. For example, this doji in here, you'll get a couple of dojis and then the markets continue higher. You've got it again here, again here. They're also prevalent at the tops though, and the bottoms, as you can see here, this inverted hammer, and of course this long-legged doji that signaled the beginning of the impulse wave at the onset of this bull run back in February. I still believe, of course, that we are immersed deeply in our fifth wave, the impulse wave, during our corrective period. But as we talked about a few days ago, typically in a market, you get that what I call the 3 count and the 5 count, meaning within a larger wave there is what we call subwaves or minor waves. So that, as I pointed out, when we look at this A wave down, you can break it down, of course, into a subwave. And in the same way, I would not be surprised if this B wave also had activity such as that. In other words, it's not going to surprise me even if we hit our target, which is the 1210, 1211 area right in here. It would not surprise me, of course, to see the market move in a zigzag manner, so something like this, before it hit that potential top. In most cases, you do get that. However, there are times you do not. When we take a look at this wave 4, you can see there was no subwave within that. So there are times where you will not get it. Typically, though, you will. You will get subwaves within the longer wave itself. The fact that we had the market move and on a couple of occasions now try to go to that $1,200 mark. We're going to put it in right here. And as you can see, the market attempts to come in. It does trade above it, but doesn't close above it. It does come down. And once again, we see the market in the same manner, kind of testing that area, but unable to break that area. For that reason, technically, I see some real resistance here. And as I said, it would not surprise me at this point to see the market backtrack or retrace a little bit. Now, we do have our stop rather tight. Our stop is sitting at 1175. So that my recommendation for really conservative traders, you can go ahead and either really tighten that stop or actually pull some profits out of the market. So that if the market trades, as I say, true to Elliott wave, we have, of course, our A wave right down here, and that is comprised, of course, as I talked about before, those subwaves, and the fact that we had this market trade and unable to really take out that $1,200 area. My sentiment is, my gut feeling is, on a technical basis, it's probably going to go and trade back a little bit lower unless we get some very strong fundamental news to change that observation. So that if that's the case, what I'm going to recommend is as follows. You can go in and you can actually go ahead and tighten your stop, take it to 1190, which is right at the low of this candle here. In that way, if the market does come down, we have locked in $11 of profit. We've got a profitable trade. So traders, go ahead, move that stop up. It's probably going to get hit. If in fact it trades true to form, what I would expect it to do is to come down about 50% of this last move up. So you've got a move of, say, 1160 to 1200. It will probably move back around 20, which would take it roughly to this area here, and then continue for the final part of this B wave. I would look to re-enter the market on the long side here. And of course, I'm still believing in terms of our strategy that if it follows Elliott wave classic wave theory, we will get that final corrective wave down. That corrective wave down should be equal to that of this wave A. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.